saying that Broadcom shares could triple from that level. Now, they haven't quite tripled yet, but since that video was posted, shares of Broadcom up 121%. I heard from many people saying that they were up big, and I can't feel more excited for you. Now, if you've missed the boat a little bit on Broadcom, don't worry. That is because we haven't tripled yet. And I think we still have upside into the $700 price range. Not anytime soon, but over the next several years, I believe the trend is durable enough for Broadcom to triple from the mark that I pointed out a year ago. When we go through the conference call, we are going to see a master class of executive leadership over at Broadcom. Hock Tan is by far my most favorite CEO in the entire stock market. There's no CEO that I like better than him. Now, that doesn't mean if Broadcom offered me a big salary, I wouldn't go work at Broadcom. That is because Hock Tan takes away the coffee machines, takes away employee perks. And when you drive by the Broadcom offices in the great Silicon Valley, you almost miss them. They are non-discreet. They aren't super fancy, especially compared to other trillion-dollar companies. Hock Tan is one of the cheapest guys in all of the stock market. And it'll show up on the financials. And you can probably tell by the smile on my face. There's nothing that gets me more excited, other than probably my children waking me up in the morning, than when you see 28.2% revenue growth in a quarter, and you come over here to the financials, and you see operating expenses year over year go from just $4.4 billion up to just $4.7 billion, and you see quarter over quarter, going from $16 billion all the way up to over $18 billion. And our total operating expenses at this company, did they go up? No, they actually went down from $4.8 billion down to $4.7 billion. I just love this company financially. And what's interesting is everybody's talking about Google TPUs. I ran a promotion at my former employer back, I think it was like back in 2023. We were talking about Google TPUs and Broadcom and the opportunity there. That story is old. I know the market is waking up to it now, but what's very exciting about Broadcom is they have this infrastructure software business and they have a networking business, and that creates a complete company here, and one that is poised to continue to go higher. We'll look at the operating cash flows as well, talk about why this is such a great opportunity, and we'll look at this technically. We are pulling back in the after hours. I'll talk about it was initial pop higher based on the guidance and everything that they had on the press release, but then Hock Tan did start talking on the conference call, and I think quite specifically talking about OpenAI, or the lack of things that he said about OpenAI. We'll talk about that. Used to be when you were tied to OpenAI, your stock went up. Now you're tied to OpenAI, and there's a lot of questions. I tell you what, if you can accurately predict the future of OpenAI, whether it's going to be successful in a multi-trillion-dollar company or it's going to fail, turn out like a Yahoo or a Netscape or something like that and be a relic of technology, if you can sit here today and accurately predict that, my goodness, you could make a life-changing amount of money over the next 4 or 5 years. I will tell you that a good portion of my day, multiple hours of the day, is trying to figure that out. And I'm telling you, as we sit here on December 11th, it is 9 p.m. Pacific time, I still have no idea. I think it can go either way. But Broadcom is diversified enough. And I tell you what, they're linked to the one company that probably will kill OpenAI if it were to become a relic of technology, and that is Google. Now, over the past year, you're up 121%. Year to date, you're up 75%. Past 6 months, you're up 60%. Over the past month, you're up 14%. So don't worry. We're down 4.5% in the after hours. Nobody cares because, man, this one just continues to move higher. And you'll see all the evidence of why. Q4 numbers came in, $28.2 billion, $18 billion worth of revenue. They also gave us guidance for the upcoming quarter. Essentially gave us kind of full year expectation, not full year expectations, but they gave you some clues into next year as well, even into 2027. They're expecting approximately $19.1 billion. The consensus at the time was too low at $18.3 billion. You look forward, and people are pointing out, like, this company is very richly valued compared to everything, right? Even like the NVIDIAs and the AMDs and some of the kind of the higher flying, higher valued semiconductor stocks. This thing is super overvalued on paper, but again, you have to factor in the growth rate. Look at the growth rate over this company. 26% growth. As you move into next year, 40, 50% growth rate on this one. And you'll see that like not all 40, 50% growth rates are created equal. With Broadcom, you know for a fact that most of that revenue, and I'll show it to you here in a second, most of that revenue is going to flow all the way down to profits. Most of that revenue is going to flow all the way down to operating cash flow. That's not the case across the board in AI. Yes, it's the case with NVIDIA. Yes, it's the case a little bit with some of the software stocks, but the hyperscalers are spending every last dollar that is coming in at this point on the data center. The data center companies, we went over Oracle. Oracle had negative free cash flow, which means operating cash flow minus CapEx was negative. With Broadcom, you know it's going to be exponentially positive. We'll talk about some of the things that they'll do with their cash here in a moment. One thing that they're doing is they're raising the dividend by 10%. So you got a 10% raise holding this stock. They'll likely continue to do that. Now, on the conference call. High level, the company achieved a record $18 billion in revenue. That was up 28% a year ago. And guys, the growth rate is going to accelerate. And they confirmed that on the conference call. The growth rate is going to accelerate. And your gross margins over this company are a rich 77.9%. Now that is blended because you have this infrastructure software business that had gross margins of 93%. And that compared to 91% gross margins a year ago. I'll remind you, the software business grew 19% over the past year, and it's a $7 billion run rate on the quarterly basis. You are printing $7 billion of quarterly infrastructure software revenue with 93% gross margins. So my goodness, as the revenue comes in here, a ton of it is gross margins. And some of you say, well, that's gross margins. What about operating profit? Well, Octane doesn't even allow there to be coffee machines in the offices, guys. So, and I talked about at the jump that operating expenses actually declined sequentially quarter over quarter, and year over year, they're just up fractionally. And so this money is going to flow down. That's what's so exciting. Now, XPU or the custom GPUs getting a lot of attention these days. They acquired their 5th XPU customer. My guess is this is probably XAI. Could be wrong about that because they've already announced Google is obvious. OpenAI is one. You have ByteDance. There's Meta. There's Apple potentially here as well. There's Microsoft that I think will come on board. You didn't get information on that on the conference call. $1 billion is not a lot of money, but it would be a lot of money to maybe like an XAI. That is placed for deliveries through late 2026. Now we've talked about infrastructure software. We've talked about the XPUs. This company actually has a very dominant networking business. In fact, they have a Tomahawk switch on the market, which is by far and away the best in the marketplace. And their current order backlog for their networking switches, or what they call the AI switches, exceeds $10 billion. $10 billion. And their 102 terabit per second Tomahawk 6 switch was the first and only of its capability out there, and it continues to book at record rates. This is something they have a lead here over at Broadcom. Now, if you want to throw in NVIDIA's proprietary technology in there as well, NVIDIA is doing some great things on the networking side, but you don't have to, but you typically pair NVIDIA networking with an NVIDIA GPU. With the Tomahawk, you can pair it with AMD, you can pair it with NVIDIA, you can pair it with the TPUs, you can have it kind of across the board. So this is a broader market that they're dealing with here, and they have a lead here. They are the market leader there. Now, in terms of backlog, talk about their AI order book. And that is in excess of $73 billion today. The total consolidated backlog, which I'm assuming includes some of the infrastructure software, which they sign you to kind of multi-year contracts there as well, is $162 billion. They expect the $73 billion AI backlog to be delivered over the next 18 months. And you can almost rest assured that the bulk of this $73 billion is Google. And you know that Google, based on their financials, are good for the money. Now, one thing that they say, and this was emphasized multiple times on the conference call, they fully expect more bookings to come in over that period. So they said, don't take that $73 billion as the revenue we ship over the next 18 months. They expect to ship or at least add to the backlog there. Now, in future quarters, depending on how the backlog is fulfilled, the backlog could rise, it could fall based on shipments, but more or less, they're going to continue to add to this backlog. Now, where the stock took a dive lower was when they started talking about OpenAI. They have a 10 gigawatt deal with OpenAI between 2026, but the emphasis was it looks like it got pushed out, more like 2027, 28, and 29, not 2026. I think Wall Street was expecting this 10 gigawatt, which I think is about $10 billion, to show up in 2026. And so some of the growth rate that is already forecasted by Wall Street might have to get dialed back just a little bit. We also understand that OpenAI, there is huge doubts, and I think they're warranted. There's huge doubts that this company has made such massive commitments across the board, whether or not they'll be able to come up with the money or the financing or the creative circular financing or whatever they have to do to get the money. Now, they got $1 billion from Disney today, but that is a drop in the bucket of what OpenAI has committed to. Tan called it an agreement, an alignment of where we're headed with respect to very respected and value customer OpenAI. He didn't say it was a signed contract. No, I would say right now that you have to assume that none of the contracts that OpenAI has signed are guaranteed, but there is always the backstop of Microsoft potentially. And I don't need to get into it on this video, but is it possible that Microsoft is going to let OpenAI hang itself over the next 6 to 12 months, and then Microsoft is going to come in there and scoop up 100% of this company? And then if Microsoft scoops it up, well, they would love to have a custom silicon business that is 1 or 2 generations deep and keep it off balance sheet for the next year. Let OpenAI absorb all of that. Let OpenAI go out there and try to absorb all this outside capital. And then Microsoft comes in there, scoops up all the assets, gets the large language models, and takes over OpenAI for pennies on the dollar. I'm not saying that's a conspiracy, but believe me, when you listen to Satya Nadella talk about OpenAI, I think you can read between the lines. I think it's possible. That's the strategy. Now, back to Broadcom, $18 billion worth of total revenue last year. It was a shade over $14 billion. Here's where it gets magical with Broadcom, and we've already discussed this. You have these massive gross margins, $18 billion in revenue, just $4.2 billion in cost, gives you gross margins after some amortization and that type of stuff at about $12.3 billion. Last year was a shade over 9. Last quarter it was 10.7. So we are rapidly growing this. But look at your R&D from 2.2 up to just about 3. Your selling, general, maintenance, and operating expenses, I mean, they don't let you have any perks over at Broadcom. From $1 billion last year up just fractionally to $1.1 billion. We've already emphasized your total operating expenses. You breathed on them over at Broadcom. So here's your operating income from 4.7 all the way up to $7.5 billion. That's what gets really exciting about this company as you move into next year. And Google's TPUs are coming. Doesn't matter what OpenAI decides to pay or push it back. I mean, north of $20 billion is coming for this company next year. Google is not going to slow down. They feel like they might have the foot on the neck of OpenAI right now. They are not going to slow down. They are going to re-accelerate and continue to accelerate their spending. In fact, the stock is being rewarded for that. And so you are going to start putting up gigantic, you're going to be putting up $6, $7, $8 billion more of net revenue at this company, and $3, $4, $5 billion of that is going to flow all the way down to profit for this company. And that's what's so exciting. When you come over to the balance sheet, it's not NVIDIA. It is not Google. They have some cash, plenty of cash. They have some inventory. Now they come down here and they have this long-term debt. They acquired the software business largely through long-term debt. I think the VM acquisition was like a 50 some odd billion dollar deal. But Hock Tan is very disciplined. He continues to whittle this down. I think this was a number closer to 70, maybe even $80 billion at one time. They continue to whittle this down quarter over quarter. You'll see it when we get to cash flows. They have plenty of room to continue to whittle this down. And the rates that they borrowed at like the low interest rate. They're paying like 3 or 4% on a business that is growing 19% year over year with 93% gross margin. So the trade-off there was absolutely fantastic. Hock Tan actually had a private equity kind of finance background. And when you go through this company, you see exactly where that leadership came from. He manages this balance sheet and financing as well as anyone. What he also manages, very underrated, is they go out and acquire companies over at Broadcom and they integrate them into the business, which not every, you look at like a Salesforce, that's something that they haven't done well. Many other companies have not done well. Intel, going and buying a company and trying to integrate it, it just doesn't work. With Broadcom, it does. That's why I believe the company, if they continue this momentum, they'll likely continue to whittle down this debt, but then when interest rates continue to drop, they'll go out and make another acquisition. And so that is always on the table as well. Now, net income basically doubled year over year. Here's your net cash provided by your operating activities from 5.6 all the way up to $7.7 billion. Property, plant, and equipment, very minor. This is why I have turned mega bullish on this area of AI, and I'm a lot more bearish on the data centers because the data centers have negative free cash flow, which is this operating cash flow minus CapEx. It's negative because they're having to invest a ton in CapEx. Now, years down the line, it might pay off, but my gosh, a lot has to go right for that payoff to come when right here today, as we sit here, it is here for Broadcom. It is here for us as investors, and it's here for the taking, and Broadcom is taking it. So, as you can imagine, the company generates $7.7 billion of operating cash flow. They have almost nothing to spend it on. So what are they doing? They continue to pay down the debt. $3.6 billion this quarter. Last year was 6.7. So they continue to pay that down. Now they do some refinancing, but overall net reduction of debt. You saw that when we were here on the balance sheet. They continue to pay the dividends, and we talked about how you got a raise overnight by about 10% on that dividend. They did not buy back any of the stock in the most recent period, which I don't mind with shares are at an elevated level. We've just confirmed a new higher high on the shares. Yes, you are pulling back. You'd like deeper pullbacks. I tend to be a little quicker recommending this one or kind of re-recommending this one. So if you're a newer subscriber, we don't do this for every stock, but ones that I feel have visibility out a year, 2 years, 3 years down the road. And with Broadcom in particular, their key customer is Google, and we have visibility out to Google. One of the reasons why we stopped loving Oracle is, yes, we have a visibility of their backlog, but we have zero visibility into their lead customer, OpenAI. We don't have visibility past like 2 months from now with that company. And so there's so much more risk there. With Broadcom, there is some risk. There's risk with everything. But in the grand scheme of things, when Google is your lead customer, we'll come in here and re-recommend this one. And so I'll send out an alert. You'll get an email and say it's kind of like a blue chip rebuy alert. And then we'll kind of reset the expectations. I'm looking for a move just below, probably call it 380 on this one. It's not the smoking hot area, but if you want to continue to top up your shares of Broadcom, maybe you've made some other money in some other areas of the market, or you've got a salary coming in, you're just devoting more to your account and you're looking to allocate it. This one, again, a year ago, when shares were over 100% lower in the $200 range, I said we could triple and get to $700. Here we are. Yes, we're at 400, but I still believe these finances support a company, particularly as we get into the mid-20s, $30 billion revenue rate. This is $3 trillion market cap type company. That is because it's all supported with heavy gross margins and the fact that the company controls its expenses A lot of this revenue growth is going to flow down to profit, free cash flow, dividends, buybacks, going out and acquiring other companies. They have a market leadership in enterprise software. They have a market leadership in networking, and they have a market leadership in custom ASICs. There's really no other semiconductor company that is on the same level of Broadcom. The only one that is anywhere close is NVIDIA. These two stand on a class of their own. They have great leadership, they have great products, and they have great execution. That's why I continue to recommend Broadcom. And like I said, we get a little bit deeper pullback. I'll send out an alert, but you know the area I'm looking for. It's just south of about 380 on this one. Hopefully you enjoyed today's video. That was Broadcom. It's always a pleasure to look at this company. It's always a pleasure to do these videos for you. We'll see you on the main channel on Friday. Good luck with your investments.